This is the richest number in history. This is a chart of the Wilshire 5000. What is that? Well, nobody really looks at this much, but it is essentially representing the value in terms of dollars of 5,000 stocks in the United States. This represents a price right now of 44.98K, basically is saying that the value of the stock, 5,000 stocks in America, is worth $45 trillion. 45 trillion. Well, what is the GDP of the United States? Anybody know? I'll tell you right now, it's about 28 trillion. If we divide 45 divided by 28, we get about 1.8. What does that mean? Well, 1.8 means, yes, it's the ratio, but it's basically saying that the value that people have put into the prices of the stocks that we have paid for and own in our portfolios, on average, is worth 1.8 times the entire amount of GDP of the United States. This is sometimes called the Warren Buffett Indicator. Maybe some of you have heard of it. Well, what is fair value? Well, fair value is 100%. Basically, the values of the stocks, the Wilshire 5000, should equal our GDP. Because after all, when all these stocks sell their items, that goes into contribution to the growth of this country. In other words, that's what we're producing, gross domestic product. This is the richest number in history. A number, for example, in the 2008 financial crisis, this number was just 1.4, and it sold off to go below 1. That's why Warren Buffett in 2009 was buying almost everything. Because generally, this number should always be above 1 if we feel the country isn't going to go to be obliterated in some way in the future. However, right now it's at 1.8. And obviously at one point not too long ago, it was at a little higher than that. Literally, this little movement down from here to here represents the smaller value. In other words, the market has adjusted a little bit. However, for it to be fair, that number would have to go down below where this chart points. It would have to go to fair value way down here. And it hasn't been there in years. If we were to scream out, where would it be then? Well, guess what? It would have been COVID. This is why some people are expecting the prices that all the advancement prior that occurred, just after COVID will be retraced. I'm not so sure I'm a believer of that. However, it's something to be noted. Remember, we had no GDP when the country was shut down during COVID. So maybe this ratio there was no $27 trillion of GDP during COVID. That number is what we have today. So basically, the prices of the market has outpaced the GDP by a huge margin since COVID, which is a real red flag. I think another red flag is the lag effect of inflation, the inflation index, CPI and PPI, which is out tomorrow. The American consumer needs to buy. We all understand we like to buy in this country. However, at this point, with credit card this high, the American consumer is just simply running out of cash. They run out of cash, that means that they can't buy. But if they can't buy, companies can't sell, they get marked down. So, albeit I have expected some retracement in the market to occur far before this, as we sit here up 15% or so on the year, it's no time to get optimistic now and throw in the towel about being on the sidelines and waiting for a better opportunity.